Minister of Finance there, Zainab Ahmed. Now, one of the fundamental goals of a modern economic system is to keep prices of goods and services stable at rates that would not be detrimental to the economic system. The attainment of this goal of ensuring that prices do not rise continuously is very crucial in that non-attainment of goals carries with their macro and macroeconomic consequences. The National Bureau of Statistics, in its recent release for the inflation data for the month of November, shows that headline inflation in Nigeria rose for the 15th consecutive month to a 34-month high of 14.89% in November for 14.23% in October, with one on a month-on-month basis as headline inflation index increased by 1.60% in November. As Nigerian economy grapples to overcome its myriad of challenges confronting it, the banking sector, which has been affected by the negative effect of coronavirus pandemic, is gradually experiencing growth recovery, as experts call for another round of consolidation in order for the sector to thrive beyond the crisis by growing their capital base faster than the rates of inflation and devaluation of the naira. Joining me live in the studio to give a fresh perspective to the rising inflationary pressure and the stability of the banking sector, of course, other financial units across the country. And as we look at the second wave of COVID-19, it's really interwoven. He's the former president of the Chartered Institute of Bankers of Nigeria, a professor of economics, Professor Segun Ajibola. Thank you very much for your time. I appreciate this so very much.
Thank you, the moderator.
Now, let's start with the figures that we have from NBS before we dovetail into other economic issues, which I know you would like to talk about. It was 14.23 before. Now we have 14.89. Some said, well, we're expecting more. Some said it's conservative enough. How do you see the figure? How does it come to you?
Well, the inflation rate and the pressure we are witnessing in our economy today is cost push. The most challenging aspect of that is even cost of food. We look at food prices, the pressure there, the inflation rate from that segment is over 18% as of today. So when you consolidate with other elements in the economy, then we are talking of 14.89, 15%. We have a big challenge in our environment. We recently experienced both official and unofficial devaluation in the value of our local currency, naira. Then it shouldn't be surprising to anybody that cost of food continues to rise because we've not been able to match consumption with local production, even though we are making progress. The Central Bank of Nigerian Borrowers Program has made some impact in the agri sector, in production of rice and other staples, but we are still not yet there. So the pressure from the food segment of the entire economy is more than what one would expect, the overall inflation rate in the economy. So unless we are able to address the cost elements from various segments, then, like you said, we can have seen the end.
Borders have now been reopened. We have 4 of them open, according to the minister. Others will be opened by the end of the year. It's a two-way thing. I think it's a mixed bag. Some think that this could also open up the country again, and some think that it is the way to go, as manufacturers will be able to move their produce to neighboring African countries. What are the positives in all of this, and where do you pick some holes in this very development after how many months?
No, Nigeria occupies a very peculiar position in West Africa, in Africa. Our economy is seen as occupying a central position, and Nigeria as a big brother to other West African countries, even African countries. So many of these countries feed fat on Nigeria's economy. So we have official transactions, the problem of dumping and so on, coming through our borders. So when the border was closed, the economies of other West African countries suffered a lot because of the rate of dependency on Nigeria's economy. And of course, those who also rely, as Nigerians that rely on borders, either for economic support, those who go into official and legally allowable economic transactions, they also suffered. Those who also engage in illicit transactions,
smuggling,
they suffer. So with the opening, it is hoped that those transactions that are officially sanctioned will help both the Nigerian economy and the other economies within the West African sub-region. But the problem is, how do we police these borders? Over the ages, our borders have been so porous that even when we roll out rules and regulations, like we are talking about those items that are still banned, like rice and so on and so forth, can we say in all sincerity that as of today, those types of
really banned
products don't still find their ways to Nigeria, despite the ban? So how do we police this porous border? How do we convince our officials, custom officials, immigration officials, to put the interests of Nigeria first? So these are the fundamental challenges that we have. Either we close the border or we open the border. Are we in a position to police the border and the activities going on there? So the opening definitely has its positive sides because legal transactions can now commence and we can see some interactions between Nigeria and other parts of West African sub-region. So we can see that. But we still have the challenge of policing
and that's really important, managing the borders. That's really key. We also see COVID, the vaccine development. A report says today that vaccine will also get to Nigeria very soon. And some people are saying that this would help to restart and re-energize the value chain that we all know that has been disrupted, manufacturing, all of the sectors, even crude oil prices above $50 as at today. Prof, do you see, it seems that it's looking better?
I tell you, what we are going through now, the spike in these COVID-19 cases, quite very, very scary, very, very worrisome.
It is.
If the figures being rolled out are anything to go by, I am not sure we got to this level even when we were at the height of that pandemic in May, June, July, thereabout. Yes. So then we ask, what is happening? And it's like, as a country, I have not seen the presidential task force coming out forcefully as they used to do when the heat was on. I've not seen that in recent times. We started seeing 200, 300, 400, 700. We are now talking of 900, close to 1,000 per day.
Yesterday.
You see that we are testing more now than was the case in May, June, July, or in truth, the situation has gotten worse. So what do we do? And you see that we are hoping that there is no point bothering ourselves in December because by January we have the vaccine. Even where the vaccines are rolled out already, there are controversies over the effectiveness and even the after effect of this vaccination. So what do we do? And like somebody was saying this morning, that can Nigeria afford another complete lockdown? Our economy is already in recession. If we lock down now, where are we going to get to? In economies, we pray recession doesn't turn to depression, because economic depression will need a lot of fundamental restructuring of the entire economy. Are we in a position to do that now? So, in other words, as Nigerians, as individuals, we need to take care. Then travelers getting into the country, how do we implement the guidelines, the protocols and that everybody falls in place. Then, officially, how do we now ensure that we implement and we enforce the federal regulations on COVID-19 management? So there are gaps here and there, and we need to fill those gaps. If we will not be forced on to go for another lockdown with devastating effects on the already fragile economy. So it's a major challenge, it's a major problem.
I was looking at the banking system because anytime we have you in, we like to always look at what's happening at the banking system. The CBN governor came out to say that the banking sector remains very strong at this time, despite the challenges, even quoting the capital adequacy ratio for the banking industry was above 15%. That was when he gave his speech during the bankers' dinner very recently. Now, with this, does it really mean that Nigerians can go to bed and believe that the banks are really where they should be?
I'm sure the banks and the bankers, they are sleeping with just one eye closed at the moment. Because the state of health of the economy dictates the state of health of the banks, unless something is wrong somewhere. If the economy is not okay, the banks cannot be okay. Unless there are some management and fixing up here and there that are not yet manifested. But the truth of the matter is banks did a lot through the help of technology during the lockdown. So that kept the system going. Banks were able to surface and provide multivarious products that met the needs of their customers during the lockdown. That is one. So lots of earnings came from that segment. Two, the policy of central bank on lending to the various segments of the economy and the minimum ratio of 65% loan to deposit ratio also helped business growth and business development in banks with the impact on earnings. So then the various incentives that keep coming from the central bank and other organs of government to the various segments of the economy passing through the bank also help the banks to remain focused and to remain in business. But the question is, how long can we sustain this? How long can we sustain? So there are still issues. One thing everybody should pray about is we will see from your analysis now that already total loans and advances from banks to the economy was over 19 trillion at the last count. And I think we were about 15, 16 there about this time last year. So, which means there has been tremendous growth, which has gone into the economy as a whole. We pray that the added volume of loans, none goes awry, so that there won't be problem of additional provisioning of for bad and non-performing loans. They could be very, very challenging, because that will have implication on provisioning. So that's one area that needs to be well guarded and well managed by our banks. Also, we need to keep technology working and well abreast. Even maybe we benchmark the best practices all over internationally. So if we can do that and we continue to service the customers, we'll be able to get to, we'll be able to stabilize the system. But as of today, you know that policies that border on cashless economy, policies that border on even customers' interaction, and there's some recent pronouncements on identity number, NIN, and so on and so forth. We just hope that some of these things will not upset the system and create some disconnect in the entire system, especially between the banks and their customers, between some operators in the telecom industry and their subscribers, and so on and so forth. All these will have ripple effects,
of course,
on the overall economy. Because when offsetting one is offsetting all. An injury to one is an injury to all. So we need to get our bearing right in some of these areas. We've all along been talking about some fiscal dislocation that creates problem for monetary management. But again, now we are seeing some policy dimensions coming from other sectors of the economy that may have ripple effect on the banking system. So these are areas we need to carefully manage in an economy that is already undergoing pressure, in an economy that is already in recession. We need not upset the few segments that are doing well. We are still struggling as a country. Lots of incentive coming from central bank, even the finance bill that is being passed, which you will be discussing later. We see some incentives coming there to stabilize the micro, small to medium enterprises, even the large corporates, even the multinationals. There are some incentives that are coming from the government quarters to stabilize these areas. But the little dislocation here and there can upset a lot of things. So we need to be very careful as a country.
Let's run up on this note, Prof. The monetary and fiscal side, you've touched on that. Prof. Ife was with me yesterday, and he said there needs to be this handshake. He said it's getting better than it used to be. I don't know what your assessment is at this time. The federal government coming up with their policies. CBN is everywhere trying to do something to contribute to the development of the economy.
CBN is going through a lot of pressure. You know, all along, however, monetary policy is largely, monetary management is largely market determined. So you go to the market to influence what is going on. And mostly, it's long that we've seen some direct control of the monetary system. It's always been, in recent times, through some form of market determined management styles. But fiscal is largely, it's not market tied, so it's coming from the government side, like the share of the share from the federation account, like how do we manage the oil revenue, what do we do with remittances, and so on and so forth. There are fiscal pronouncements that can dislocate monetary management. But in recent times, I agree with that commentator that in recent times, we've seen some handshake, we've seen some synergies, we've seen some understanding between the fiscal area and the monetary management area. We just hope we'll be able to improve on it. If, for example, the fiscal budget is passed on Monday, as we have been told, then we have 12 months to implement. Then the kind of fire brigade approach to fiscal management will not be there. And the managers of the monetary system will also have the time to sit down and create that nexus between the monetary and the fiscal system. Unlike when the budget is passed in April or June, and you start struggling to implement. So if we can have that, then the central bank will be able to focus on its primary responsibility of price stability. See what could be done to moderate the behavior from the fiscal side, match that with the discipline in the monetary system, and we'll be able to have a more disciplined system that will focus on the key macroeconomic variables of price stability. Either we are talking about the local price, we are talking about foreign exchange rate, of looking at economic growth, which is in the negative now, or looking at problem of unemployment, which is also rising. So we need that synergy, we need that nexus. Indeed. And I think where we are today is far better than where we used to be. So we must appreciate the efforts of central bank and even the political leadership in getting this nexus together. But mind you, we are not yet there.
Professor Segun Ajibola, I must thank you so very much. For my president, CIBN, I thank you for your time. I know it's really not easy driving through Lagos traffic, but I appreciate you joining us in the studio live. Thank you for your time, sir.
Thank you very much.
Thank you, Prof.